Hi, I'm Dave.
And I'm Paul.
And we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. All right, we're back. What's going on, Paul?
Nothing. It was funny watching you having to delete like a bunch of files to free up the space required to do this recording.
I think it's time for a new computer. I had to empty the trash can and then go delete more files so we could actually have space to record.
You know, I've been trying to convince Dave that just to pull the trigger on a new one, and we'll see. I'm working on him. You guys can see that microphone on YouTube. Guess where he got that?
Yeah. From my
good wedding gift.
Yeah, before that I was using like a $30 something that I got a few years ago. But yeah, I don't like spending money until I have to. But this computer, 4 or 5 years old, it still works really well. It just needs to be cleaned up. But I got a lot of stuff on the cloud. And see, I thought the cloud was supposed to take things off of your computer, but it still takes up all the storage.
So iCloud can.
Not just iCloud, but even my Google Drive. Like it still takes up storage on my hard drive.
I think there might be a way, at least with iCloud, there's a way to have it just all in the cloud.
Yeah.
And not on the hard drive.
You probably got to pay for that, right? Pay extra.
I pay extra for a little more storage. Because Tammy never deletes a picture, so she get 8.5 million photos on her iPhone or whatever, and
it's all burst mode, so it's 10 copies of the same.
10 copies of the same photo.
Yeah,
yeah.
Well, if there's anybody if there's anybody listening who knows how to clean up a computer really easily, I'm not too savvy with it. So
Dave, I've got the solution. I'll get with you after, but I've got an app that I run on my Mac. It's called Cleaner One Pro, and it'll find pictures and delete one of them for you. It'll if you did 5 attempts of the same photo, it's actually very good.
You see, the problem is I'm going to need storage space to download that app, and I don't have enough storage probably for it. So
yeah,
it's a catch-22. Oh well, this is a pretty nerdy conversation. It's not something we usually talk about.
Yeah, let's get to it.
So, hey, first and foremost, if you have not registered for our live Q&A on February 16th at 7 p.m. Central Time, do so. Hit pause, go to the show notes right now, hit the link, just register, and you'll get the email with the invite, the Zoom link, and we'll see you guys live February 16th. I think that's a Thursday, right? Thursday evening.
Sounds good.
So nobody has anything going on Thursdays. I think that's the best night of the week.
Thirsty Thursday?
Thirsty Thursday. Well, I mean, have a drink. Bring a drink with you. Maybe we should have a drink too.
Yeah.
Wealth and whiskey.
That's right. Those guys always had a good time.
Yeah. Right on. All right. Well, anything come up with anybody you've been talking to recently? If not, I might have something. I was
nothing out of the ordinary.
Okay. Yeah, it seems like a lot of it is you get a lot of the same questions, right? That come up time after time.
I'd offer this, Dave. I would say that ask yourself compared to what, focus on the banking function of the product, focus on the process of IBC. I think people sometimes they still have that mindset of whatever investment, making an investment in life insurance. No, you're paying premium. You're handing dollars of life insurance anyway. So again, that goes back to mindset and really understanding the process and the product. So anyway, that's just very generic, but that's something people get caught up on. But
that's good. That's real good. I really enjoy listening or having conversations with our listeners because they come in, I met with a guy today, and right off the bat, he's like, I listened to the podcast. I read the books. I read Nelson's book. and I'm convinced this is for me. I'm ready to move forward. So we have a little discussion to find out actually, what do you know? Do you know why you want to do this? What's your knowledge base? But you check that education box and you're good to go. In my book, I'm ready to move forward with you.
Yeah.
So
in a case people didn't realize, and I tell people this all the time, Dave, that come through my process, I use have you read that book as really, it's my screening criteria. You're either going to comply and do what I ask you to do because you need to do it. You need to understand.
Yeah.
Or you're not. And that's okay too. But you've got to put in the work first so that you'll know what we're talking about when we do talk about stuff.
Right. And it's pretty easy to tell when somebody just watched a video on YouTube and they got really excited about it and they want to get moving. And
yeah, they never text you back either after their initial excitement. They gone.
Yeah, that's why I'm going to send you an email with some resources. When you check those out, get back to me. Let's talk again. Yep. And because one part of business is bringing in ideal clients, but eliminating non-ideal clients from your calendar as quickly as possible, so you can make room for those who actually want help and who are ready to move.
That's right.
Yeah,
not chasing you.
Yeah. Right. Well, I was talking to somebody today who said, he's been investigating IBC or learning about it for a while now. And then all of a sudden, hey, I'm ready to move forward now. So that goes back to, we were talking about this right before we hit record, is IBC is caught, not taught. Right. So you can
for sure
do all of that, but it may be just that one more, that next book you read or that next podcast you listen to, or finding the right video where somebody's explaining something clearly and it finally clicks. And you said, okay, that's the missing piece. I'm ready to go.
Awesome.
So, yeah.
Love those moments too. That's great.
Yeah, that's exciting. Well, all right. I think today, why don't we talk about, so we were reviewing some old Laura Murphy, I think it was from the LMR, Laura Murphy report. They do some articles, and I ran across one that was from 2018, I think.
Yeah, it's March of 18.
March of 18. And it was talking about Warren Buffett. And this is pretty cool. So what we do with IBC, you as your just everyday IBC user, you're basically doing what Warren Buffett does, just on probably a much smaller scale. But we're utilizing the exact same principles that billionaires use. So let's dive into that. Like, what makes Warren Buffett has said he pays fewer taxes than even his secretary, right?
Sure.
And how is that? There's a super easy way not to pay taxes. The easiest way is to not have an income.
That's right.
Right. So how does somebody like Warren Buffett or other billionaires or big time CEOs, how do they fund their lifestyle if they don't have an income?
Well, they use leverage, right?
Right.
Warren Buffett he's got so much value, right, that he's able to go to the bank and say, hey, I want a line of credit to go do this. Or I want to, maybe he does loan. I mean, I don't know what exactly he does, but he's going to do something like that where he has a relationship with a bank and he's going to get what he wants because of his level of net worth and everything. And he's using probably the same banks over and over again as well, right? Because it's profitable for him to do this and it's profitable for the bank to do this because it's Warren Buffett. And also, that I remember that when that came out in the news about Warren Buffett, he pays less than his secretary. As a percentage of income, no, of course he does.
Right.
Right. What's the source of his income, right? Is it dividend income? Is it, what is the type of income? Yeah, sure. If he's paying less than a 1099 person, for sure.
Yeah.
But anyway, but yes, on our level, Dave, you're right. We do the same thing. We are using leverage, in our case, the policy loan feature of our policies, to go make money with. And he's doing the same thing, using his investments as collateral,
right?
Not his cash value, but his investment value as collateral for a bank. And sure, they're gonna lend against that all day.
Absolutely, because it's no risk for the bank. They know Warren Buffett has billions, Jeff Bezos, Bill Gates. Elon Musk. These guys don't spend their own money. They're not going to spend their own cash on anything. Why would they? They have their cash in stock, like in their company invested, right? And it's growing because, if they didn't believe in their own company, maybe they wouldn't have it in there.
Right.
But why interrupt that growth to go spend it when you could just leverage and collateralize those stocks for an asset loan from the bank to go buy an asset, or maybe just a regular old loan to go do whatever you want, fund your lifestyle? Because our loans, and this is very important, bring it back to IBC as well, but are those loans that Warren Buffett, say he goes to a bank and he says, I want a $1 million loan so I can fund my lifestyle for the year. The guy probably spends less than $1 million on his personal lifestyle, right? He probably spends like $100,000 from what I've read.
Yeah, apparently he's pretty frugal, lives in a very modest home, still drives like a 20-year-old Cadillac, I think.
Yeah. Yeah, just not motivated by flash and stuff, right? But say he goes to a bank, says, I'm Warren Buffett. I want a $1 million loan. Chances are that bank's going to give him a loan at very, very favorable rates. Like, how about 1% interest only? Warren, here you go. Here's $1 million. And you don't even have to repay it. We'll just keep the interest clock running. The next year he goes to the bank, says, I need another $1 million. They give him another $1 million, right? And it's all collateralized against the assets that he owns.
And none of it is income.
None of it is income. Therefore, none of it is taxable. So he can fund his lifestyle or go buy assets that will fund his lifestyle, pay him and fund his lifestyle. And that loan was not income. So it's the same thing with the life insurance company loans, right?
It's absolutely the same thing. And I remember going back to my initial, before I was a customer of IBC and learning about it and learning about dividend paying whole life insurance, one of the most appealing parts of the process and the product was that I could do that. I could access my money that I'm paying in premium. It's turning, the company's going to do whatever it's going to do with that, put it to work either via policy loans or in their investment portfolio, whatever, so that they can meet their future obligations. But that if I leverage that money, collateralizing my cash value, and of course the death benefit pays off the loan if I die, right? That's how it works. And my money's growing uninterrupted on the side. I still get my full dividend if declared. I still get my full contractual growth of my policy that's guaranteed by the company every year without interruption. Yes. Give me more of that, Dave. Right.
Right. And you get that on the full amount, not just the amount that's not being collateralized. You get it on the full amount, even the amount that is collateralized.
Oh, direct recognition.
Yeah, there's advantages. So we won't get into that. We
have some good friends. Yeah, that's another discussion. It's good to. I have to throw that jab in there every once in a while.
Yeah. So you mentioned, the reason Warren Buffett can do this is because it's basically guaranteed, right? Yes. He's got the assets to guarantee that. We have a guarantee too when we go to, or the insurance company has a guarantee, which makes our loans so risk-free for them because it's guaranteed by the death benefit. So
that's right.
Yeah. Should we die while we have an outstanding loan, the company's going to recapture that money from the death benefit that they have to pay out.
That's right. And, Carlos puts it as, this is the safest loan that the life insurance company can make. It's a zero risk loan because of the nature of whole life insurance, Dave, right? And the way it's designed is that all of that is baked into the design, right? Like, yes, interest is accruing, right? So it's a future payout to the company that they owe your beneficiary, right? But even with the growing interest, they're just reducing the death benefit, as you said, right? So they will get their money back. Now, is it good for their portfolio? Doing that? Probably not. It's probably not great, but they will get that. They will recoup those funds. And frankly, I love being able to do what Warren Buffett does by not having a repayment schedule. I can pay the interest if I want. I can just let it ride. I can manage the interest as time goes by. Personally, I'm going to repay my loans as fast as I can because I want to reuse that money.
Yeah.
But yes, concept is exactly the same.
Yeah, it's one of the biggest, in this report, they point out three big, highlights of what Warren does compared to what we do, or, in parallel to what we do with IBC. And the first is access and control over your money. So if you have cash value in your policy, then you have the contractual right to loans against that cash value whenever you want. You have access to capital, right? Just like Warren Buffett has access to capital, whether it's his own or in most cases, I'm sure it's somebody else's capital. He just leverages his own.
That's right.
Yeah.
There's a small difference, and it's actually better. I suppose his is pretty automatic, but ours is really, we're the borrower. Okay, great. We're the loan officer. Great. And we own the bank. He may own the bank too. I mean, he owns Geico and other stuff. But you get what I'm saying? Like, we're like this, we're everything in the transaction. We say who, we say when, we say how much. That's really nice. Now, of course, he's getting treated just like that, of course, because he's Warren Buffett, right? And Bezos and Gates, all these guys, right?
Yeah.
Same. But, at our level, the you and me level, Dave, the normal American level that people can relate to, that's a very powerful position to find yourself in.
Yeah, very. I mean, where else can you get a loan where you get to control the terms of that loan? You control everything except the interest rate.
Right. Yep.
Yeah.
I don't care what that is, really.
Right. Because I'm earning uninterrupted compound growth on the entire amount that I have ever accumulated in there anyway. So whatever I owe in interest at the end of the year is going to be, small in comparison to what I've earned on that gross amount, especially later on in the policy.
Yes. Yeah. You stole the words right out of my mouth. As that policy gets more and more mature,
mm-hmm.
and it's really amazing at how much cash value your premium dollars produce later, especially later in the policy's life. So it's great.
Yeah. Yep. Policies mature even if we don't. We might age, doesn't mean we mature. So I was reminded of that when I was talking to somebody. I had a conversation with Chad recently. I was like, describing this other guy. I was like, yeah, he's a young kid, but he's a lot like me, personality, and he's mature. And he's like, wait, I thought you said he was a lot like you.
Oh.
Yeah.
Well done.
Well played. I can be mature when I have to be.
That's right.
So that was the first highlight. The second one is something you've already mentioned is flexibility of the repayment terms. So, I mean, it's kind of hard to overstate how flexible the repayment terms are when you really don't have to repay the loan at any time frame whatsoever.
Right. This is a paradigm that it blows their mind when they're first getting into this, Dave, I think. I love this conversation. They're like, so, how do I pay it back? Do I pay it back every month? I'm like, well, you're the banker, right? You can do whatever you want. The banker gets to do whatever he wants. So if you want to set up there is a way to set up, an automatic draft, right? Mm-hmm. Just like you would if you were depositing money into a Roth IRA. I'm not sure why you would do that, but you could. Or you just remember to log into your policy every month and do it manually. You can do it that way too. But they're always surprised by that there's no repayment schedule. And they want to know how that is. I alluded to it a few minutes ago, but it's all baked in. It's all baked in. The life insurance company is going to get its money one way or another. And I always say it like this: you're either going to die, we want you to live as long as possible, or you're going to repay your loan. Simple.
Yeah. In either case, they recoup that money.
That's right.
Because it's guaranteed to happen. It's guaranteed that we're going to die. It's guaranteed that they're going to pay out a death claim when we do.
That's right.
So, and unless you live to exceed 121 years old, it's guaranteed that death benefit is going to be more than what your cash value is, or any outstanding loan you've ever taken.
That's right. And what Dave just alluded to, folks, is if you live to age 121, they're just going to send you a check, because at that point the policy will endow, unless it's universal life insurance and it won't exist. But or term. But
Zing.
Yeah, this is a zinger right there. But But yes, the cash value and the death benefit at age 121 are the same number because the cash value is the net present value of the death benefit.
Right. And that's how policies are calculated, just for if anybody wants to gee whiz. They kind of reverse engineer these. So at age 121, cash value, death benefit equal each other, and then they work backwards from there.
I think it's still 100 in Canada.
Really?
Yeah.
Maybe they have less life expectancy. You know, all that poutine that they're eating.
All that poutine.
Maybe it's not good for the heart.
It's cold.
It's cold? I thought it was warm. Is it cold?
No, I mean in Canada.
Oh, yeah.
It's cold.
Yeah, but there's health benefits to cold.
Yeah, I've seen videos of these people jumping in these ice baths and stuff, and
I can't stand blowhards who post videos of themselves in an ice bath. Like, good for you, pal. I mean, so if you read Wim Hof, I read his book and all the health benefits around cold and cold immersion. You know, I like a 60-second cold shower at the end of the shower. But I've been doing that for several months, and I like it. I've actually noticed that I haven't been as cold this winter when I'm outside or, you know, sitting in the truck waiting for it to warm up. Anyway, I don't want to get too much into that, but that's why I think it's an old wives' tale when they say, don't go outside without a coat, you're going to catch a cold. I call BS on that.
you know, I read an article the other day that said that like the hair in your nose, that's, you know, your filter, what do they call it? The cilia, right? It becomes less effective because it freezes. So your filtering system is not as good in cold temperatures. Now, I have no idea. This was on Yahoo or something.
Well, you should be wearing a mask outside anyway.
Well, people around here still do. Walking by themselves, wearing masks. My favorite people.
Yeah.
Anyway.
Yeah. Anyway, we
Oh.
we digress.
We digress. I'm going to digress one more time.
Okay.
Warming up the truck, fine, but you should, the best way to warm up, assuming you don't get ice in the windows and stuff, just get in and drive it away. That's the best way to warm it up.
That's another old wives' tale about, oh, you need to let the car warm up for 10 minutes, right? That's not good.
That's
it
the
doesn't
worst
make a
thing to
difference.
do.
It's the worst.
Yep.
You know what the best, so I'll one up you on that. The best way to warm up a truck is go tell your son to pull it up. Like go get the truck and pull it around.
I love it.
You know, when he's
go
15,
get it, Jack.
He's old enough that I can let him go into a parking lot and, you know, drop me off at the front door and then pick me up later when I come out. You know, I'm not too worried about him getting pulled over in a parking lot in the meantime, and I trust him. But that's the best way. Or,
you know, have a garage.
Have a garage. Have a heated garage. Here, you would need one.
Yeah.
Yeah,
Oh, for sure.
Yeah, but I don't want to pay for a heated garage. That's stupid. Okay.
All right. What's the last thing?
So the last one, which we've already mentioned, is uninterrupted compounding of your money.
I'm sorry. I'm not looking at the notes, everybody. I just know this stuff. I keep getting ahead of ourselves.
Yeah. Well, and hopefully everybody who's listened, if you've listened to every, 52 podcasts, this is, I believe, number 53, then you should know this stuff as well.
Yeah.
Because we mentioned it time and time and time again.
They know.
Yeah. And I think that's probably the biggest thing people need to understand. When people don't understand that, then this whole thing doesn't make sense.
Sure.
Right? If you're not earning on your dollars while they're in there, yet you're paying interest to borrow somebody else's dollars, that doesn't make sense. It only makes sense when you are still earning on those dollars that you're leveraging. Right?
Yeah, of course. Yeah, it wouldn't make sense, would it?
Right. It would be like, I'm borrowing my own money. Why would I pay to borrow my own money? That's what uneducated morons say, or people who are educated just trying to deceive you with a nice Southern accent.
How dare you?
How dare you? Yeah. You know what James calls him? Church rat.
Yeah. No question. I mean,
yeah.
Call a spade, man.
Mm-hmm. Anyway, but that uninterrupted compounding is so powerful, especially like you said, as the policy matures and becomes more and more efficient. Like, how many things get better with age? Besides wine, as they say.
Just us
and us. Yeah, my hair has certainly got better with age as I got out.
Beautiful.
Of the military,
just beautiful hair.
And I don't have to get a high and tight.
Yeah, I got a little bit. I got some product in there today. See it?
Yeah, you do. Yeah, I can see your scalp.
Well, it was getting over the years and stuff. Like, I told you, I've got like the pricklies over here.
Yeah, you got nappy hair, man. Yeah.
Right.
Yeah.
Yeah. Doesn't work. Doesn't work like that straight hair you got, you know?
It
That
is straight.
Eastern European hair.
Yeah.
You know, Sicily's close to, you know. Anyway.
We both come from somewhere in Europe.
That's right.
Yeah. So again, if you don't understand the uninterrupted compounding of your money, I think that's probably the biggest misunderstanding. And when people get that, they're like, oh, now this makes sense.
Right. And as a simple example, Dave, a possibility would be this. I take a $100,000 policy loan. I'm going to be charged $5,700 of interest during that year if I make no payments on it by the end of the year, right?
Yep.
Well, what's to say, you know, at some point in the future, right, my dividend is $5,900 that year.
Oh, it'll certainly be.
And that
larger.
doesn't include my guaranteed growth, let's say,
Right.
on top of that, right?
Yeah.
Anyway, so that's
Right.
that's obvious possibility, or
Yep.
like not even a possibility that will occur in the
Right.
future,
Yep.
depending on how old your policy is.
Right. So the longer you live, the better it gets.
Yep. And for a lot of you listening, it'll happen very early in your policy's life, quite honestly.
True. Especially if you're super preferred, like myself.
Yeah, just super healthy.
Super healthy, man. No, actually, it doesn't make that much of a difference. People get all tripped up about that.
They get all tripped up on it.
No,
It
it's not that big a deal.
It's really not. You
Yeah.
know what makes a bigger deal is really motive premium.
That does make a big deal. We should talk about that. Let's talk about that next episode. We'll make notes and really talk about the premium, the modal premium, and
Yep.
how that matters. Yeah.
Yes.
So, good. You got us a topic for next week, so we don't have to think about it. Yeah, by the time this comes out, we'll be about a week away from the IBC think tank. So definitely looking forward to that. Get
Yep.
down there, seeing all the usual suspects, and
Yep.
and getting schooled by some very, very educated, experienced IBC practitioners. Looking forward to it.
Yeah, I definitely feel that audience and that group of people is, there's some of the best life insurance agents in the nation there, if
Yep.
not the best.
Yeah, absolutely.
So great group to be around.
I agree. Yeah, and I think we are still on the younger side. So it's like one of those places you can go and you're kind of like the young guy, the young whippersnapper. Yeah.
Yeah.
It's not gonna be that way for much longer, pal.
I know. We'll be mid-40s next or this year.
I was talking to my brothers and my sister today. We were all texting, and I was like, do you guys all realize we're closer to receiving Social Security than we are to the legal drinking age?
Right.
Like, put that into perspective.
Right.
Yeah. We're
it's
closer, as my brother said it, we're closer to 2050 than we are to Full House. Yeah. Yeah, perspective. But by 2050, my policies will be booming.
Oh my goodness.
Will be paying me so much tax-free income every year. I won't know what to do with it.
Yep.
That'll
I
be
mean,
nice.
the only regret we'll all have is that we didn't start this 20 years ago.
And start bigger, right?
I started pretty big.
Yeah, you started pretty big. Yeah. Yep. So some
It's
people
all-
get it
all
right away.
relative.
Some people grow into it. Either way is fine. Start where you're at.
Yeah, I mostly got it and then got it more about a year later. I was like, oh yeah.
Yeah.
What am I doing?
Yeah. All right, man. Well, good. I think we'll leave it there. Again, a reminder: go register for that live Q&A February 16th before it fills up. I don't know how many we can allow. 100, 1,000. I don't know. It might
That's
fill up.
probably enough.
That's probably enough. Yeah.
Yeah,
But
it's probably
yeah,
enough.
hopefully we see you guys there. All right. Well, until next time, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.